Alright guys, so we know the US economy today is in deep trouble, and despite the urgency, the Trump White House keeps giving us a ton of hate fakes. We are now in a headline-driven market where nothing makes sense anymore except the statements coming from Washington. Actually, that doesn't even make sense. And here's the problem with the US economic team. Everyone there is telling Trump what he wants to hear instead of what he really needs to understand. And this only reinforces the cycle of failure.
Exactly. So all those factories that you're bringing in because of your trade policy, we're going to train people in trade craft, bring back trade craft to America so that people can work in these factories with great paying jobs, and we're going to train them, and we're going to remake the American dream for all these people. We're working together.
That's right.
Right, Lori?
Absolutely.
Now it gets worse when this spills over to the US-China trade war. Previously, we heard that Trump wants to lower the tariff on China. Then we had Bessent say that the US won't reduce tariffs first. And after that, we had Trump say that Beijing called when it didn't even happen. China clapped back saying there were no talks. It's like the White House manufactured the crisis and now they are trying to manufacture the solution as well. They are in damage control mode to try and prevent the bond market from imploding, to prevent another stock market collapse, and to force the Federal Reserve to cut rates. But we are now back to square one. The US wants China to grovel and to call first to discuss terms.
He is not giving up on the fact that China has been ripping off the United States of America for far too long. And President Trump has brought hundreds of countries now from around the world to the negotiating table. We have 18 proposals on paper from nations around the world who recognize that they have, in fact, been ripping off the United States. And there's a president in the Oval Office right now who is no longer going to tolerate it. So this is the art of the deal. President Trump is using the leverage of the United States to bring nations to the negotiating table. That includes China, who he remains very optimistic there will be a fair trade deal with China that finally puts American workers and American industry first.
It's confirmation that the original plan is still going on ahead. The world is ripping off the United States and hundreds of countries are now submitting to Trump. Now all that sounds fine and good, but if we gauge global sentiment, the US isn't winning at all. This isn't even a stalemate. The world has had enough, and even major allies are starting to pivot away. We have reports that Japan will resist Trump's plan of a US coalition to block Chinese exports, to rally major economies to essentially blockade China's economy to prevent cheap exports from coming in. But Japan is not going to play ball. They know what is at stake. China is Tokyo's biggest trading partner. The Chinese economy is an important source of goods and raw materials. Japan also told China on multiple occasions that they don't agree with the US on semiconductor export restrictions. The curbs don't just hurt China, it cuts away revenue to Japan as well. And this puts the US in a very bad position. We are on day 16 of the 90-day tariff pause and no deal has been signed yet. Where are the 90 deals in 90 days? Trump and Bessent are now in a very difficult position. If they reimpose the tariffs, the dollar will likely crash again and bond yields will fly up again. But if they don't and stay at 10% indefinitely, it's a loss, and we experienced the last 2 weeks was just a big waste of time. And we know the US is starting to crack. Bessent has confirmed there will be no currency targets in trade talks with Japan. Now this is important because the big fear was for the US to pressure Japan all the way to strengthen their currency to weaken the dollar. But that would absolutely destroy Japan's export market. Remember that Japan and the US, they compete in two major markets, the auto industry and semiconductors. By making Japanese exports more expensive, Bessent can naturally lower demand for Japanese imports, not just in the US but around the world as well. In turn, Americans and other countries will import more US goods. It's a zero-sum game, and the Japanese aren't exactly blind to that. The finance minister said that the currencies should be determined by the market. Weakening the yen beyond that will hurt their economy. So far, the yen has rallied by more than 9% this year, which means Japanese exports are 9% more expensive to US customers, and maybe even more to other countries. It's not a surprise why Japan is resisting the US on both the trade and the currency front. The US import market is falling while China's overall economy is rising. It's a big reason why Ishiba wrote a private letter to Xi. It's to secure vital Chinese imports to Japan and still sell stuff to the Chinese market. And we know China and Hong Kong together accounts for 23% of total bilateral trade with Japan. But just like the US, they import a ton of goods from China. Chinese goods represent 70% of 2,000 products that Japan buys heavily from the global market. China supplies more than half of all those goods in these categories. That's why trying to blockade Chinese goods is self-defeating. Even if China doesn't retaliate, which they would, Japan will be hurting their own consumer. They will be hurting their own industries. Inflation will spike up in Japan and hurt consumer budgets. Meanwhile, intermediate inputs will cost more as companies they have to scramble and import from elsewhere, so their competitiveness goes down as well. That's not exactly a good ending. And we are beginning to see many countries waking up to the truth. Joining the US coalition doesn't bring any short term or long term benefit to their economies. And just in case you didn't get the message, Trump has made things crystal clear. He doesn't really want countries to sell stuff to the US. He wants everything to be made in the United States.
Again, we don't really want Canada to make cars for us, to put it bluntly. We want to make our own cars, and we're now equipped to do that. They took a lot of our car business. Mexico, too, took a lot of our car business. We want to make the cars here. I'm running this country. I'm not running Canada. And that's why I asked Trudeau, who I call Governor Trudeau affectionately, but I asked him, why are we spending $200 billion to support Canada, to subsidize Canada? And he was unable to answer the question. I mean, why are we doing that?
And if the final agenda is to wean the US off global exports, why would countries submit to Trump now? It's crazy that he told the world this. That might be the ultimate aim, but voicing this out is such a horrible move. Over the last 100 days, Washington has been on a non-stop escalation with China. That's a very dangerous position to be in for both the US and China trade, but to the global economy as well. We can see how desperate things are getting. We started from a 10% tariff on Beijing, and it keeps ramping up as the days go by. The tariffs are now at 145%, and we have crazy mixed messages from the White House. Trump said he would bring down the import tax substantially, but Bessent is hemming and hawing. He doesn't want to de-escalate the situation first, but force Beijing to the negotiating table. We can literally see a battle of ego versus economic reality play out. The US knows they can't contain China alone, and the only way is to recruit the world. And in his latest trip to the Global Finance Forum, Bessent made a marketing pitch to the world to join Team USA against the Chinese economy. And this is fear-mongering at its finest and deserves an Academy Award for Best Actor.
China in particular is in need of a rebalancing. Recent data shows the Chinese economy tilting even further away from consumption toward manufacturing. China's economic system, with growth driven by manufacturing exports, will continue to create even more serious imbalances with its trading partners if the status quo is allowed to continue. China's current economic model is built on exporting its way out of its economic troubles. It's an unsustainable model that is not only harming China, but the entire world. China needs to change. The country knows it needs to change. Everyone knows it needs to change, and we want to help it change because we need rebalancing too. China can start by moving its economy away from export overcapacity and towards supporting its own consumers and domestic demand. Such a shift would help with global rebalancing that the world desperately needs.
But be careful of what you wish for. If China keeps boosting their domestic demand, it would give Beijing even more leverage on the global stage. Imagine an economy that is both the world's factory as well as a huge market to sell into. How is that a good thing for the US, especially for the dollar system? And the last thing the Chinese will do is to buy US goods. And if more countries buy and sell stuff with China, de-dollarization will get worse with a vengeance. The need to hold dollars and buy US debt would fall dramatically. And if Bessent really wants to pursue this course of action, The bigger agenda is to solve the US debt problem first, solve the overspending to stabilize your bond markets before attempting such an aggressive move against China. And despite what Trump is trying to do, the US deficit and debt crisis is on a runaway train. In the next 10 years, net interest on the debt alone will cost the US economy $13.8 trillion. On average, that's around $1.4 trillion a year from now until 2035. It would probably be even more. What happens if Trump isolates the US economy? Firstly, the global exodus in US debt won't stop. Bond yields will stay elevated or even go up. Interest payments could continue to climb higher as well. The question here is if domestic consumption can make up the shortfall, if foreign companies are willing to set up shop in the US and pay taxes as well. Now, Bessent is betting on this outcome, but overspending is still not solved, and I seriously doubt the additional tariffs can plug that hole. The tax is also being paid by US consumers, so is the left pocket going to the right pocket? And you would think tackling domestic demand should be the priority, but Bessent is still bent on cornering China. His latest shock and awe is to demand the IMF to scold Beijing.
But we will not abide the IMF failing to critique the countries that most need it, principally surplus countries. In line with its core mandate, the IMF needs to call out countries like China that have pursued globally distorted policies and opaque currency practices for many decades. I also expect the IMF to call out unsustainable lending practices by certain creditor countries.
Now he's trying to nail China for a variety of things. A big one are their BRI loans given to other countries. But let's talk about his claim of opaque currency practices. Now to make this clear, he's basically saying China keeps weakening the RMB to keep their exports cheap, to keep their export level high. And Bessent wants China to essentially free float their currencies with zero restrictions. And that actually means he believes the RMB is more valuable than what it is today. China is actually suppressing it down. And here's an illustration of the tools China is using. In the currency market, China is a command economy, no doubt about it. The central government can fix the short-term exchange rate. They can intervene in the forex market by selling yuan and buying dollars. They can also recycle their trade surplus into US bonds, and that means buying more dollars because treasuries are a type of dollar asset after all, and that in turn weakens the yuan by strengthening the dollar. China has many other tools including capital controls and jawboning. Scott Bessent wants all of those to stop. But this is extremely weird, and let me explain. Bessent's plan is not going to work. The US dollar is the reserve currency in the world, which means Bessent can essentially strengthen or weaken the dollar as and when he needs. If he wants a weaker dollar, the best way to do it is for interest rates to come down. Now, that is partially controlled by the Federal Reserve for sure, but also by demand for US bonds. You would do your best to drop yields, and that would mean keeping US inflation as low as possible, so that money flows out to risk assets and international stocks. And this is one avenue or game plan to get the dollar weaker. Well, how are we doing on inflation? Now, people's expectations are starting to fly up. We went from under 3% when Trump entered office to a high of 6.7% in just one survey. And this forces rates to stay high as investors demand a higher yield. So by not solving the inflation problem, the dollar is still higher than where it's supposed to be. Well, let me correct myself. There's another way to get a weaker dollar amid a trade war. Bessent can simply crash the US economy so that the Federal Reserve will be forced to slam rates down and print money, and then he could get his weaker dollar. Now perhaps that's the agenda, and it's really pointless to blame China because other countries, including Beijing, they're going to do the same thing. They're going to manage their currency one way or another, and they're not going to stop. So we have to brace for impact here. Things are so haphazard in the White House that the whole equation could change virtually tomorrow, and welcome to Bizarro land. But let me know what you think. Will Japan really reject the plan to contain China? And will Bessent get the IMF to punish China? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.